Christian Gattiker. Christian, thanks very much for joining us. Tell me, first of all, what you make of the move by the government today in Switzerland.
Well, I think this was a clear setback in terms of fighting the Swiss franc strength. Overall, there was an expectation of a 2 billion plus package. Now they had the first tranche only, and if you put it into perspective in terms of GDP, we're talking here about 0.6% of GDP. Now, if you look back 3 years, what the US did, they spent like 5% of GDP in terms of stimulus, and probably that's also what markets were pretty disappointed at, to see that this is rather lukewarm in terms of really relieving the Swiss economy.
So they didn't spend enough. Is there also more they could be doing, and the Swiss National Bank could be doing, to try and lower the franc's value?
Well, to a certain extent, I think what the current policy is that they actually even wait for the real crisis levels, like parity towards the euro, so 1 franc, 1 euro parity, before they really get out the heavy armor, so to speak. And in the sense of in the case of the Swiss National Bank, this would certainly be a currency peg to announce that was under discussion. I think on the fiscal side, there is a lot less leeway, although I think, this was rather on the disappointing side what they did there.
Okay, no, I mean, when you look at something like the euro being a peg with the euro, is that still a possibility? Do you think that that would be a good idea?
Well, there were a lot of discussions over the past few weeks exactly on that topic, and it looks as if there is a broad consensus outside the Swiss National Bank, also with the industry, with the overall public, that this might be kind of the last resort in terms of kind of dampening some of these negative effects. So from a constitutional point of view, they do have the possibility to do that, and I think at some stage, let's say at below 110 versus the euro, or maybe even only at parity, they will probably start these type of measures. No,
I'll tell you what, if you look at the idea of a multinational initiative, that would be something that would be much more likely to work. Do you think that there is any chance that that's likely to happen, given everything else that's going on in the financial markets?
I think that's absolutely spot on, and we've been actually voting for that for a long time. But this summer was really a currency war type of situation, that there was a devaluation of all the currencies, and exactly these so-called, or the perceived strong currencies like the Swiss francs, were shooting through the roof. I think exactly this is what the G7 central banks should actually talk about, to kind of get these currency volatilities out of the way, because this is killing the real economy.
Now, we've got Swiss GDP out tomorrow. What are you expecting to see?
I mean, it's still a strong print from a nominal point of view, so it's expected at 2.3% year over year. Doesn't look like deflation or a complete recession, but I think if we see a shortfall there of expectations, actually that would be quite an alert. And we also get the PMI tomorrow, which, if we get a disappointment there, probably the market will be a lot faster in pricing in recessionary tendencies, which we basically expect to happen for the first half of 2012.
You actually expect a double dip in the first half of 2012?
I think the Swiss economy has a high probability of falling back into recession, given the currency moves. I mean, overall, our economists on a global scale have a 40% chance or risk of the global economy falling into a recession. And I think with a Swiss special case of a strong currency at the same time, I think this is like a double whammy for the economy.
Indeed. Now, let's look more broadly at what's going on. There are parallels here with what happened in 2008 across Europe and elsewhere. But do you think that we're not seeing anything quite as dramatic as we did then, are we?
It's just this weird feeling of déjà vus here that you get now and then, starting with the ECB tightening into such a fragile situation this summer, and then the financial stress picking up last week with Bank of America, Soc-Gen. Against that backdrop, I wouldn't rule out that we have dislocations in the second half of this year. Of course, there's a lot more liquidity out there this time around, and this should dampen, especially with regard to the financial stability, somewhat of this shaky situation. But overall, we're quite concerned also about the government situation and the banking system, in particular in Europe, but also the US. So I think it's really a mix that makes it quite uneasy at this stage.
And what are your biggest concerns within that mix? I mean, clearly what's happening in the Eurozone with the sovereign debt issue is a major concern.
Yes, certainly, and the political dysfunctionality, or the dysfunctionality of the political system, that they don't get their way together in Europe in particular, but also in the US again. I think that's one of the major risks. And if you look at all the milestones that have to be taken before even the measures on helping Greece back in July to make that political reality, that will actually take as long as October. And I think against that backdrop, you know, we still have a few hurdles to take before we can really speak about the calming of the situation.
OK, Christian Gattiker, thank you very much indeed for joining us from Zurich.